The fixed income market in Turkey is divided into two, the local market and the international market. So the issues that are faced with the local markets are the inflation and the central bank hiking or not the rates. For the international market, the main concern was the politics, the local politics, which means that now that the elections are gone, we saw this as very positive. So we think that now that this is out of the way and the rate hike, which is going to be coming in December, which we think will not be something very, very high, it's going to be like one time and it's going to pass, I think that US dollars is going to be a good opportunity in Turkey. If I may say, by order of importance, first is the local politics. Second would be the rate hike, the USD dollar strength, which would cause, obviously all these cause the current account deficit move. If I could also say the European economy, economic growth and recovery, given that it's one of the main exporters for Turkey, and to another extent, the Iran deal. So because Iran used to be one of the main one of the trade accounts with Turkey. So it used to be 30 billion, now we're down at 2. So if this opens again, it would be positive for Turkey, but I think this is a way longer term. So the bond markets in Turkey are divided into onshore and offshore. So for the onshore, I can't really comment. For the offshore, we would prefer sukuks versus conventional for two reasons. First, the nature of the sukuk market is mainly GCC, UAE focused in general, and more specifically into UAE. So for us, any issues that comes out of Turkey are something we like for diversification purposes. That's one. And second, sukuks have better technicals than conventionals. Given that the market is a demand-driven market, so the sukuks are more resilient and less volatile. So for us, we'd rather go into sukuks versus conventionals. In terms of the premium, it depends. For mainstream GCC markets, which are, for example, Indonesia and Turkey, the natural investors are conventional buyers. Plus, the conventional bonds are into all the EM indices, where the sukuks are not. So in these markets, sukuk tend to be either flat or wider than conventionals. Whereas in the other emerging markets, such as GCC and MENA, the natural buyer is a sukuk buyer. So in these markets, sukuks tend to be tighter than conventionals. In terms of capital markets from DCM side, I can't really comment, but for me personally, I only think that getting in touch with investors, as an investor, getting in touch with DCM side is very important. Plus, the sukuk market, I mean, not only sukuk, the bonds market in general out of Turkey have been muted, given all the political uncertainty that was there. Obviously, I'm talking about the hard currency market, not the local currency. So the conference coming here, and especially the timing, like right after the election and right after all this political uncertainty is gone, or yet, if I may say, reduced, I think that the timing is very important for us to have more clarity on what's coming next, being Q4 or Q1 next year, especially ahead of end of Q1, where the central bank governor term comes to an end. So I think for me to be able to meet all these DCM people, have more clarity on the pipeline and what to expect.